Hi, good morning, good day, wherever you are. Welcome to our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart every day, also today, and it's Friday, 9th of November, 2018. Welcome to Admiral Markets. We will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you're in the European Union, also you will find on our web pages different offers and options for retail clients and professional clients. As you maybe know, since August 2018, the ESMA regulation is in force. Since then, the retail clients just have a maximum leverage for Forex majors of 30, for index CFDs only to 20, and only professional clients, if they are eligible, can still get a higher leverage. The picture shows more than 1,000 words. 2 prominent examples, DAX 30 or also euro dollar. The margin requirements could be quite different. So if you're a professional trader and you like to apply for the professional client status, just visit our webpage. Still, retail clients will have a big benefit and unlimited protection against negative balances. Professional clients don't get that via regulation, but some brokers and of course also Admiral Markets have an additional protection. We call it negative balance protection policy. Here you get a protection up to 50,000 British pounds, what is around about 70,000 euro. All details and how to apply for it on our webpage, and here you see the specific link. This is me. My name is Jens. My English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. It doesn't matter if you are a retail client or professional client. Anybody gets the same spreads. DAX 30 or also euro dollar, 2 examples, typical spread of just 0.8 points or pips during main trading hours without additional commission. Also here, check it out like on admiralmarkets.com. One word, global offers. If you'd like to take a closer look, what we are offering in the European Union, or what is our activity in Chile, or what we are offering in Australia, you can do so. We have a compare our offer webpage. Just visit our webpage and you'll find more information there, and you can do the mess. Enough from my side. Now it's time for Dirk. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Good morning, guys. Transmitting the screen and just starting with the most important currency pair of the world, euro-US dollar. Let's see what will be happening today. We are tanking back in direction to the year's low of 113.01, or let's say the 113 handle. And very interesting to say that it might be a real fight about that marker going around and even going back upside. Why only upside? Just talking before we go into more chart technical details, just talking about some interesting stuff. Today is extremely interesting because there are a couple of Forex options expiring at the 10 a.m. So that means 15 general mean time, so Greenwich GMT time. The so-called Forex options, if you count that up, going up the road in direction, I will just try to mark that with that blue box here. Let's see if that is going to be moved here. Just doing that a little bit that way here with the blue shape going up there in direction 115 in direction 115.50s. Let's say that's approximately very close to that 50% Fibonacci marker here. And doing the same stuff with that blue box here to the downside, going to that 114. Let's just check that out. What kind of market was 114.10 to 114.20s. Another big handle where approximately 4.45 billion are going to be expiring. Of course, this is not a 100% guarantee that the market is going to be rocking up there. Just something like a little bit of a mixed story, of course. You know the daily average turnover from the euro-US dollar currency pairs. Last time we spoke about that here at the webinar. If you see that spot trading and the general daily average turnover on the Forex market is around 5 to 5.3 billion a day, a couple of options like the volumes like we talked about here, between 10 and 20 billion a day here on Friday is not too much, but of course it is something like a little bit of a let's say like a how could you express it, like a feeling like you get the direction, a little bit of the direction of some major market participants like banks and companies securing stuff to the upside. So it is just a way up. I will just mark that with a couple of other Fibonacci retracements. You see those ones here with the 61.8 at 114.98, so that's very close to that 115 handle. And if you're going to be if you check that out from the last low, we see here from the 113.02 up to this spike here, and just use another color here. Just don't confuse with that black lines. Just take a little bit of orange red here, and just to have some more visible lines to the 61.8 level here, will be marked with a horizontal line here as well. So 113.80 is approximately, and another one to the upside, which is in direction to the 38.2 level. With this, which is around that 114.25 handle here. On top of that, quite close to that major marker from the Forex options expiring at that level of 4.4 billion today. If you look at the stories, of course, you need to be aware that we are going closer, that we are coming closer to that story about Italy and Brussels told Rome that they're gonna have a chance to rebuild and to rewrite their new household plans until Tuesday. So if that time is going to be expiring and nothing happens and nothing happened and nothing got sent from Rome to Brussels, this is going to be something like a major warning for them. And it'll be rough, I guess. It'll be rough for the currency pair euro-US dollar and for the European currency as well. So let's see what happens if we going to be started in the Monday evening, if we get some news about that, or at the weekend. Let's see what happens there. First of all, today's movements in the euro-US dollar are so-called drawn up right now. I told you guys that it might be interesting to just fight the downtrend here, because I have the feeling that they're going to be protecting that 113 handle again. Not 100% sure, but looks like it because of those major billions of options inspiring to the upside. Okay, we spoke about a couple of currency pairs the last weeks. I told you about the Kiwi, the New Zealand dollar versus the US dollar. That one rocked up quite well. We spoke about natural gas. I told you guys that we might get some nice entries around that zone of the 313 down to the 303 handle. It didn't dip too much to the downside here, but as well as I already told you that it might be rocking up in direction to the $4 handle in the couple of weeks and months to come. So that is still on the cards. And not to forget, we spoke about the NASDAQ 100. After the midterms, after the Democrats gained back the House of Representatives, we draw that blue shape, that so-called short zone here at the 61.8 level last week, and so that the market might be rocking up there, and it's a new way of a short possibility, and right now it looks like that. So possible targets to the downside, back down to the 7K level again, and going back down even possible to 6830s, where we see the 23.6 level. So still wallet this Fibonacci analysis here, still wallet these levels. Nothing big has changed. If we're going to be rocking up back upside, we will still have to break that handle of the 61.8 level, which is around 7270s. Interesting thing possibly for today. We didn't open the Brent chart, so we will be opening that one right now and closing that one here, going to the daily, going to some let's say more details from the last upside move to this year's high, and just in case where to look for some bear targets, just marking that with horizontal lines here. That these are the 63.80s and even close to that $60 handle a barrel. But we are still looking for the upside. If you see that move from the year's high to the current lows around the 70s, of course you can calculate yourself. You see the high at 86, 97, 96, so almost 87 bucks, going down to 70. So that means 70 bucks a barrel downside move. And if you look at percentages, we are very close, and we are around the 20% marker to the downside. Very close to that, and hovering around and getting close to that back. So that means if you're going more than 20% to the downside, we are speaking about a so-called bear market. So bear market territory is already scratched and is really near and around the corner all the time here. And that might be nice to have something like a defending move back up to the 61.8 level. So that means we could have a target. We could have a target to the 61.8 level, which is at the level of, let's see that horizontal line here as well, 76. So a little bit underneath that, I would say, for a target, something like 75.80s or 75.90s. Not only to be sure that this level is not going to be scratched if you type that in, for example, with a pending order or with a take profit signal that you're going to be taken out automatically. All right. A couple of things from the fundamentals, from the stories just around with the oil market, and if you just hear the noise or read something about all the noise going on about the OPEC status. So they still a Saudi think tank is speaking about possibly ending up with that OPEC stuff, and that could derail and maybe just end up the whole OPEC construction. So this is just a story right now. A think tank is working on that. A think tank just possibly is weighing the pros and the cons. And in the end, let's see what is going to be happening. But if you think around the corner, if you just think to yourselves what could happen to the oil market if the OPEC cartel, if the OPEC system is broken. So you could possibly think that everybody is trying to pump the same the own amount of oil. Nothing is regulated anymore, and that could lead possibly first to softer oil prices, to more oil prices to the downside. In the longer run, maybe if all the stuff is not going to be controlled, it could lead to higher oil prices in the longer run. But we are speaking about more than 12 to 18 months and even longer. Okay, that from a couple of stories going around. Let's see what the German DAX is doing. German DAX is tanking back to old levels. If you see that this morning, we got the support line here. The Admiral pivots is at 11,449, so that's support 1. And if you're going to check out levels from the Xetra DAX, we got resistances here in 11,632, 11,685. We got the pivot point at 11,582. And we got supports at 11,521 and 11,480. So all you can see is right now from the current status 11,470 is that we are retesting the support 2 level from on a Xetra DAX basis. So this means that we still have a couple of points to go just to scratch back into the direction of the pivot point from the Xetra DAX. So that means we have room of 100 points from now on to the upside, possibly to the upside. To the downside, you got the next target, as you can see. Next targets, just going back to that Fibonacci analysis, next targets to that 138.2 levels, even underneath underneath 11,230s, and back to the old lows, of course. Year's low is 11,051.04, as you can see here. Going to exponential moving averages. Where is it? Here. You're going to be seeing that we, of course, still have way to go if we rebound, if we rebound. But from the current status and from yesterday's Federal Reserve decision and projections they gave, you will be sure in the next meeting in December they're going to be hiking. What has it to do with German DAX? Tremendously, because the more interest rates in the US are going to be hiked, the more money is going to be flowing back in the US, and especially money is going out of the German DAX, going back to the haven of US. Just have a look on all the 30 DAX members and have a look on how many percentage points of shares, for example, like BlackRock or Vanguard or all these guys are owning in German companies. You can be sure that a couple of percentage points going out, flowing back to the US, could mean a derailing more to the downside for the German DAX as well. So that's just a point from the whole structure of the German DAX, talking about shareholders and percentages. Okay, we still have some gaps open gaps, Xetra DAX gaps, of course. I'm not speaking about the future DAX gaps. And possibly interesting to the downside is just a little small one, a couple of points only. So that is going to be ending up at 11,1205 to the downside. Still a way to go, of course. And little one as well is going up there between 496,503, small as well here, but very close to the current level of the DAX. Okay. Just be closing that one here, and of course going back to another chart from the DAX, just opening another chart window just to be sure not to forget a couple of points here, going to the daily, and of course zooming in, possibly using a 4-hour chart just to be sure that that is possibly more visible for you guys. And going from the downside, let's check out if we just scratched the right level. Just check that out here at 11,049.90, and checking out these levels here, 88, and okay, so I'm going to be using that one here. And I'm just showing you guys that we might have a retest to these levels here, and a possible retest, of course, to the levels above, which is the 23.6 first here, which is at 11,540s. So that's the goal for the bulls, going to the upside, targeting that levels, and going down there to the level of 61.8 level of the Fibonacci analysis here, which is targeting 11,295. So first of all, let's check out if we have lost some stories about. Oh yes, this morning, for example, another point for that one. It's just a small DAX company, ThyssenKrupp, sent out a warning. So earnings are not the way they should be, and the whole construction of the company is not going to be well built. Let's see what will be happening with a couple of other companies reporting next week. We still have 5-6 DAX companies going to be reporting next week. So earnings season, even for DAX companies, is not over. Let's see what will be happening for some bigger companies reporting, and from the energy sector like RWE or E.ON and companies like that. Okay. Jens, possibly there are some questions. Just let me check out a level of the Federal Reserve right now.
Clients,
while you possibly
look at
tell
the
me
chart
something.
analysis to gold, please. Gold.
Gold, that's nice, because I want to speak about gold in a couple of minutes. That's perfect. First of all, going back because to that federal rate decision yesterday, and interestingly, they didn't speak, they didn't write anything about the trade conflict. They didn't tell us anything about what is going on with that. So obviously that was enough. Enough was said in the last statement from August. That didn't change too much. If you really check out what they changed, you will find a couple of articles, of course, where you even see the paper, or you just check out the website from the Federal Reserve and check out the statement by yourself, and you will just find out that they possibly changed something between 5 to 10 important words. So that's all. And they didn't change the rate, so the target rate, the Fed funds rate, is still 2% to 2.25%. But the thing which is right now very interesting, and I spoke about that a couple of weeks ago and all the time when we speak about Fed projections, target rate probabilities for the December meeting, they are right now at 76%. So that means with a probability of 76%, the rate is going to be hiked by 25 basis points, or let's say 0.25%. So the next Fed Fund futures rates could be at 225 to 250. So that means the more the rates are going up, and we spoke about that a lot of weeks here and month ago, the more rates are going up, the more interesting it will be for the stock markets. So the bias definitely has changed, and I spoke about changing biases a long time ago here at the webinars. Sell every rally at the stock market. It's not the bias like buy the dip. It's changed. It changed, definitely changed from selling rallies instead of buying dips. So that's just a point possibly which gives you a warning. Talking about gold, we see this Fibonacci analysis here from the last high of 1243.38 here from October, going back down to this level of 1211.92. So we of course we got both directions for the possibly targets for the bear, still these back down to this level. For the bulls, the 61.8 level going back to 1231. If you look at the current status of gold, and we're not only speaking about the spot trading here, we are just speaking about the whole system of gold buying and gold selling. We got Q3 2018 let's say reports from the World Gold Council, and that World Gold Council told us that from the beginning of the year 2018 on until now, gold is not being more sold than bought. It's really bought up. It's more than 6.2% in the plus in talking about buying, and the biggest buyers are central banks. That is quite interesting, and you won't bet who is the biggest buyer of gold from central banks. Possibly you will never tell yourself that it's Russia. They bought really above 90. They purchased above 90 tons of gold in the third quarter. Very interesting. And besides that, they sold assets, U.S. assets denominated in U.S. dollars, for example, bonds. Whatever they are up to, I mean, gold is something to hold on, of course, and maybe interesting to see it, to see that in the longer run. Even if you look up in a little bit of the next 2, 3, and 4 or 5 months to come, I'm quite sure that the topic of the U.S. debt ceiling and the U.S. debt is still coming up. So it's coming around the corner, and the more the story is going to be driven in the media and coming around the corner, the more gold has a chance to move up. So that's just a feeling from the market structure, and that could lead to a little bit of a higher gold price, and it won't be crazy to tell something like 1240s to 1250s is not really much from that current level. But we're going to be protected something like 1160, which we saw here in August 2018. Won't happen too soon, I guess. Just a feeling. Okay, going into more Other stuff like, or for example, indicators, just check out if we see something like oscillators, so something like the relative strength index, giving us a little bit of a signal from the 4-hour or from the hourly chart or from the daily chart. Nothing like that. Gonna be deleting that one and doing the same on the 4-hour basis with with the indicators like the moving averages, which we see here. From the moving average 200, and on top of that from the moving average 100. Where is it? There you go, 100, and doing another color. Oops, I just see that's a simple one. I want the exponential one. Going to be changing that one here as well. Okay. Okay, so this is the way where the gold is just hovering around, and if you see that moving average 100 and 200 quite caught in the middle of those two ones, looking at the 61.8 level, might be interesting to have something like a next dip buy here on gold if it really dips back to that blue box to the downside, or really close to that one, could be a buy. Rightly stepping in 100% right now is something like we see from the moving average 200 here, which is still defended a little bit, and possibly another step to the upside here, where we try to buy a little bit of a bounce here.
We need to come to an end. The time is our limit,
yes.
So 15-20 minutes, and we already speak in 27 minutes, but that's okay. But now we come to the end. Tomorrow another day, but tomorrow is weekend, so already to this early hour time, I will say have a happy and great weekend. And if you'd like to see and watch that again, just visit our YouTube channel. Go to youtube.com/AdmiralMarketsFX. In a couple of hours after a live webinar, usually you will find it recorded there. Next live webinar will be on Monday. Monday is Jay's day. Jay is more for the institutional Forex view, so if you'd like to see another trading style, just visit us on Monday. Greetings from Berlin office, and the last words from Dirk.
Yeah, Jens just forgot to say that this webinar is going to be recorded, and of course, this one you will find that one on the YouTube channel here in the next let's say minutes, or in the next hour. I don't know that exactly, but just in case you just want to catch up to some details, and if you have some questions, of course, feel free to contact me. Okay, thank you very much, and of course, happy weekend. And as you like that, next week, 11 CT, same time here. Thank you. Bye-bye.